Welcome to the part of the show where I talk about what I believe individual investors need to know over the next 5 to 10 business days before they make their investment decisions. We're going to talk about a bit about the upcoming Federal Reserve meeting. We're going to talk about economic data. What economic data should you be looking at and how can it affect the markets? And lastly, price of oil. Even though I have not mentioned the price of oil as yet on the telecast, price of oil plays a huge part in the inflation data that we're going to see and how the stock market behaves. So first, the Fed. As I've just told you, the Fed is playing a key role in how the markets are going to react going forward. There's a meeting coming up in the next few weeks. There's a meeting coming up next week from the Bank of Canada. How will these central banks or how will they react to the latest inflationary data? How much will they increase? Will they increase 50 basis points? Will they increase 75 basis points? I think the market is pricing in 75 basis points increase on both sides of the border. If we were to see the Fed only raise 50 basis points, I think you could see the market caught off guard, but to the upside or a positive. And I think you could see the markets react positively to a 50 basis point increase. If they go 75, I think that's already built in. You might see a bit of a rally, but I don't really see a need to get too excited for a 75 basis point increase. If they were to go 50, I think that would be a bit of a bonus, and perhaps people will read into it as the Fed might be slowing down as we get closer to year end. And if the Bank of Canada were to do the same, I think the markets also would react positively. I think the individual investor and individual in general would be a little bit happier knowing that perhaps the Bank of Canada is closer to the end of their rising rate cycle than the beginning. The second point I wanted to make for individual investors to consider over the next 5 to 10 business days is economic data. So we have the Fed meeting and now all the economic data that's going to come out in the next few weeks. First, we're going to have a jobs report this Friday out of the US. Very important. We saw already ADP, which is the number for private payrolls. So this is not including government jobs, come out actually this morning. They came in at around 132,000 jobs created, which was only about half of what we saw last month. Interesting enough, we saw some information on income. We learned that for those that kept the same job over the last year, their income went up by about 7.5%. Those that changed jobs, their income went up by over 16%. So that tells me that people are obviously changing jobs because they can. There are a lot of job openings out there, but it also tells me that wage inflation is still there, and wage inflation tends to be very sticky. It's very hard to bring down rising wages, especially when you have a workforce that has shrunk. We can't find enough workers to fill the jobs that we have open. So look for jobs numbers this Friday as a very important indicator. And again, the weaker the jobs report, the better for the stock market, strange as that sounds. The other economic data that I think is utmost important is inflation data that's going to be coming out in a few weeks out of the US. What is the CPI index going to say? How much is inflation either rising or how much will it have dropped? The last time we saw inflation data, it went from about just over 9% to in the 8.5% range in the United States. And in Canada, we saw it fall from about 8.5% to about 7.5%. And again, there you can see the inflation chart showing that our first tick down from the highs that we saw. So inflation data, very, very important coming up over the next, I'd say, few weeks. We also had recent GDP data out of Canada showing a decline in GDP from expectations. Canada in the second quarter grew 3.3%, still very good, but that's a really old number. The latest number that Canada reported was a negative 0.1% growth in July. And if August is going to come in my opinion, somewhat similar to July, you could see perhaps the first negative quarter of GDP here in Canada. I'll remind you that we've already seen 2 negative quarters in the US, which tells us that officially or unofficially, the US is already in a recession. The last point I want to touch on for investors to consider over the next, 5 to 10 business days is the price of oil. We're seeing oil tick down substantially. It's now down to below $90 a barrel. A lot of people are trying to figure out why that is the case. Many are predicting that as things cool down, as we get into October, November in North America, and especially in Europe, we're going to see the price of natural gas rise. We're going to see the price of oil rise based on, obviously, a shortage of energy. A lot of that has to do, as we've said many times, with the Russia-Ukraine conflict, the Russians stopping the flow right now of natural gas to places like Germany. Obviously, this causes a spike in natural gas prices, causes a spike in energy in general. And so the price of oil plays a key part, not only in an economy, but also in inflation. As oil is more expensive or becomes more and more expensive, then we start to see it filter down to the end user. If you're buying a ticket to go on a plane, to go on vacation, your ticket prices probably go up to reflect the higher costs of energy or fuel to power those planes to take you to your destination. When you have goods being shipped from point A to point B, that shipping of goods costs more via truck, via rail, via air. Any way you want to ship goods, it's going to cost you more when the price of oil is higher. So the price of oil is key. So not so much on the micro side of things, but I'm looking more on the macro side for what is going to affect individual investors' decisions over the next 5 to 10 business days or 2 weeks. And I think you want to keep a very close eye on the economic data, very close eye on what the Fed says at his next meeting. A lot of times the market will react more so to when he answers the questions in his question answer period than the market will react to his speech. And lastly, what is Russia doing with respect to pipelines? Will they be sending natural gas to Europe, or will they cut that altogether because of the sanctions that have been placed on them? So those are the three things, in my opinion, individual investors need to consider over the next 5 to 10 business days.